No, the title and the thumbnail of this video are not clickbait. I am going to show you exactly how I made over $2,650 in this past week just from trading one asset in a range. So welcome to Range Trading 101. We're not going to get super high level on the TA. This is going to be low level introductory, like showing the trades that I made, why I made them, the biases that I had behind them, the reasons I got into them, and also kind of introducing you to what range trading is. As it sits right now, I have locked in over $3,000 profit. I made this thumbnail last night, and then I took a profitable trade today. But there is a potential that you might see me take a losing trade on this stream right now after the 5 or 6 profitable trades that I've made over the past week. And that is potentially if we break out of the range that we're going or that we're kind of trading in right now. So without further ado, let's get into it because I don't want this to be a super long video, but I do want to deliver value in this video. So if you're here, make sure that you smash the like button. If you get any value out of it, obviously make sure you hit subscribe. Boom! Bang on the notification bell. Comment anything that you want in the relevant sections. Let me know what pairs that you're trading. Let me know how it's going for you. And then I will also kind of give you an update on I am going to start trying to kind of teach people how to trade because people ask me about it all the time. And I have not been super active with trading over the past probably 3 months. And there's a reason for that because I'm kind of tied up with the businesses, Wolfer Finance and Presend, trying to get them brought to regulatory compliance, potential crowdfundings coming in the future as well. So I have not been super active with trading, but I have started to kind of throw my hat back in the ring. I did take a $4,000 account. It was about 6 months ago, all the way up to 40K, 10x'd that, kind of took some profits off of that and took a break. And now I'm kind of getting back into it. And I have been developing a sort of trading course training over the past few, like actually a lot of months, because I have to take it like one piece at a time because I don't have that much time to kind of develop the content. But what I'm doing is taking all the knowledge that I have here, putting it on paper, putting it into video form, bringing it to market with something in a way that's digestible for people that will help people. And we're going to put a very low ticket price on it as well. And obviously for all my subscribers and for all my Wolfpack members and the pre-senders, we're going to give you all a discount on it in true Drew fashion. But I mean, this is a skill that literally no one can take from you. So, and that's not reliant upon other people. So I cannot speak enough about the importance of building a skill that no one can take from you, that literally has no bearing on anyone else. You're not relying on anybody else. You learn the skill and you kind of go and apply it yourself. So without further ado, let's go ahead, share the screen, and let's see how everything is going. And I'll kind of show you all my trades that I've made over the past week and my biases behind said trades. So now let's go over, and I'm actually in a trade right now, and I think it's probably in a non-profitable position at this point. Yeah, it's about down about $200. So let's look at my previous realized P&Ls. Let me hide this. Looks like we took about $450 earlier today. We took a $48 profitable trade, and that was because I got stopped out in profit. I set my stop loss in profit just to protect my portfolio and bag. My next 2 trades after that or before that were $185, $620, and then $864 and $985. And that one was back on the 12th. So just under a week, actually. We were talking about 4 days. So about 4 or 5 days. And I believe that I entered this trade on the 10th. So we could potentially say that it's almost a week. Yeah, I did. I entered that trade on the 10th. Okay. So let's go back to the first trade. I kind of broke this down on my previous live stream where I entered this trade. I started legging in. I took 2 legs. Okay. So this was a little bit different of a position. I legged in at 46.5. And then and I've been saying for weeks and weeks and weeks, okay, that whenever the Bitcoin ETF announcements came out, that we were going to see a market dump. So I put my money where my mouth was, and I entered at 46.5, and then I entered at 47.4, and I actually closed it at 46.288 for a pretty decently profitable trade at $985 profit. Now let's scroll up just really quick, and I'll kind of show you. I was trading on the 1 hour chart, and I'll show you where that trade actually kind of happened. So that trade, let's see, that trade happened up here. Okay. So I kind of started legging in like right here at the 46.5 range. It dumped down a little bit, and then I re-entered up here at the 47.5 range at the top of this. And I set my stop losses pretty far out to about $49,000. And it worked out pretty well because immediately it started dumping down, and I came down here to about this 46.2 range, which was right around here. And this is where I exited, right? And the reason why I exited here was because this was just a short-term trade, and I kind of saw a little bit like, again, this is very high level stuff, but if you scroll back in the charts, there was a pretty decent indication that it would go back down here to about the $46,000 range. I don't tend to try to get sniper entries or exits. Okay. So could I have said, okay, I want to take it down all the way here to about 45.8? Yeah. But profits are profits. And this is where I took my profit at, was right here around this range. So that was that trade. Now, the second trade that I made was on the 14th. Let's see where I entered on that one. I'll kind of explain my bias and opinions behind it. Okay, so this is after we'd had this massive dump. I started entering at 43.2. Now, there's a massive resistance at 43.3, at the 43.3 range, right? So that's where I started entering at the 43.226 is where I entered. And then I actually started, once we kind of fell through and we back tested the $43,300 range, then what I did was I actually added another half a Bitcoin to the position and went ahead and, let me see, I got to scroll up. I'm going to take this thing way down so that I can, this is the volume. So what I did was, we have back tested this 43.3 range quite a bit, and we've bumped up on it. And there's a massive, massive resistance here until we get above 43.3, or at least the 43.2 level, and we get through it with some actual volume. I'm on the short side, and this is the range that I've been trading right here. So this is kind of the top of the range. And if you look at the wicks, they can go all the way up to about 43.378. So I'm setting my stop losses up here at about 398. Okay. And there's a reason for that, because it's just outside of that range. So if I see it hit 43.4, I know that most likely we are outside of this range. So that's why I'm setting my stop losses there. And you can even see in my position, that's where my stop loss is set. Okay. So here's my, let me see, where's my stop loss? It does not say where my stop loss is, but I do have an open order for 43.2. The reason why I set it at 43.2 is we've hit that 3 different times on this wick, on this kind of trend down. We hit it a couple of times. And then right here on this wick, we hit about 42,000. So as you can see where my sell order is hit, it has been hit in this range like 1, 2, 3, 4, 5, 6, 7, 8 different times on the hourly candles over the past couple of days. So that is why I set my order price here. And then again, you can see up here on the chart where I've set my stop loss at 43,398. Okay. And I've actually been setting my stop loss at 43,398. And thank God I did, because on my last trade, if I wouldn't have, we hit, I believe it was 373. So that hit within 28 or $25 of my stop loss. And then it crashed right back down, and I exited at 42.5. And I'll show you that trade here in just a second. So give me a second to kind of zoom out on this, or get back to my trades that I was talking about. So realized profit and loss. Okay, so we were talking about the $864 trade. All right, so entering here at the 42.9, 43.2 range, and then I started closing it out at the $42,000 range. Okay, and that's because 42,000 is a massive, massive level of kind of support, and it's a psychological level, just being at 42,000. And whenever I was looking at the chart, I'm seeing a lot of support here at this $42,000 level. Right. So I'm like, okay, this is definitely a target that I believe that we can hit. Now, I'm purposely giving you this most high level overview as I possibly can, because I will start getting more into RSI, MACD, bullish and bearish divergences and stuff like that, and reading chart patterns and things of that sort. But like if you look here, you can see this actually is, there's a lot of different chart patterns in here that you can kind of pick out. So like this one right here, this is a good place to enter a short, right? And the reason is because you've got these three red candles, and I forget what they're called. They're called like, they're the opposite of the three white soldiers. The three white soldiers are whenever three big green candles come in, and most of the time they play out to where you can get a decent move to the upside, but you got to set your stop loss pretty tight down here to where it doesn't break down below that. So let's move on to the next trade, and I'll kind of show you what I did there as well. So this one was on, let's see, where did I enter? On the 14th, we pumped back up, and I went ahead and started shorting, or I went ahead and went long. Judging for this is whenever I closed out the previous trade. I said, okay, we're in this range. I'm going to ride it back up. So I went long from 42.2 all the way up to $43,000. Now, why did I do that? Because we're in that same range. Okay. This is where I entered, somewhere in the 42.2 range. And we've been going kind of bing bonging right here from 42 all the way up to about the 43.3 range. Okay. So that's why I entered this trade here and said, okay, we've got this big dump. I'm going to go ahead right here. And this is on the 14th. Let me see. Where's the 14th? Yeah. We've got this big dump, and then we kind of pumped back up to the 43.3 range, right? Or the 43,000 range. That's why I entered that trade. And then I actually flipped back short on that same day on the 15th. Okay. I flipped back short because I said, okay, we've reached the top of the range. And then what I did is I set my stop loss back up here at the 43,398 range. So my account was probably, when I started this, worth about, I don't know, I'd say $11,000 or something like that. I was risking about 25% of my account on the trade in terms of money value. So $3,000 on each of these trades. But I was setting my stop loss to where I'm not risking more than about 3 to 5% of my actual account. And what I mean by that is if I'm risking $3,000, but I have an $11,000 account, I'm setting my stop loss to where I'm not going to lose more than $400 on that trade if it goes the wrong way for me. So my stop loss is set to where I'm only losing potentially at most 4% of my account. Now, my risk tolerance is a little bit higher because I enter my positions with a little bit more conviction, and I had a bunch of profitable trades that I could kind of play with a little bit of house money along the way. So normally I would suggest only risking 1 to 2% of your account, like setting your stop loss. No matter what your position size is, make sure your stop loss is set to where you're only going to lose potentially 1 to 2% of your account. And if you want to be on the higher side, you could go 3 to 5%, like what I do, but you need to be able to enter with conviction and understand your risk parameters on that, in that sense. So what I did was I flipped short. I went from 42.9 and I sold it at 42.7. This was just a quick scalp trade, and it was probably somewhere around this point right here where it was on the 15th. Let's see, we pumped up. I entered on the 15th. Let's see, when did I exit? My exit, I believe, was on the 15th as well. So if I went in here on the 15th, and I started getting in on this candle, or say, this candle right here is probably where I entered, these candles kind of over here to the left, right? Then what I did was I just wrote it back down on this candle right here to the 42. I probably entered right here on this candle, and then I wrote it right back down here. Now, did I miss out on some profits? Absolutely. But I set my orders and I walk away because I run businesses. I have a life. Everybody has a life. I went ahead and set my orders, and that was that. Now, let's get to the last two trades. The reason why this one is at only a $50 profit is because whenever I entered this trade, it was a short, 42,932. I set my stop loss up at the 43.3 range. Now, we did pump up close to that, but once we kind of dumped back down, we had, and this was on, let's see, this was also on the 15th. All right. What we did was we dumped back down, and then I moved my stop loss to be in profit. That way now, and this is a really good way to mitigate your own risk. Okay. Once you get into profits, Don't be greedy. Don't keep your stop loss set out, because worst case scenario, you take a $50 profit and then it blows through your stop loss, pumps back up to where you entered that trade again anyways, and then you just re-enter at a better position. And that's exactly what I did. I set my stop loss just barely in profit. I made 50 bucks, and then guess what I did? I immediately re-entered that trade, okay, at a better price at the, let's see, 43,058 range. Okay. So when I closed that trade out, I immediately put my order back in just above 43,000. Okay. And then I again set my stop loss. Always set your stop loss. I set it at 43,398. We pumped up to almost 43,398 at that point. Okay. And then we went right back down, and it worked out perfect for me. We actually had this massive wick that went all the way down to like the 42, I'd say 42.2 range. Let's see, what was the low on this wick? I've got to scroll up just a little bit. The low on this wick was 42,000. Now, I exited this position at 42,586 and 578. All right. So I knew that I was going to be in profit on this because I was already in profit, and I set my stop loss down here to where no matter what, I would always be in profit. Then I set my limit order at that 42.5 range, which was kind of like right around here. And it was a place where I knew that we could hit. All right. If you look, we hit that place so many different times in the past like 3 or 4 days that I was confident in exiting my position at that point. Now that we have pumped right back up, I re-entered another position, another short position at the $43,000 range. Then I set my stop loss, as you can see on this screen, at 43,398, and we'll see how it works out. I might get stopped out in at a loss, and I believe if I get stopped out in a loss on this one, it'll be about a $400 loss. So it could potentially take out and wipe out this last trade almost. But overall, we're still in massive profits, over $3,000 in the past week. This is my point, and this is why I'm saying that setting stop losses are so valuable, because whenever you're doing trading like this, if you set your stop loss out to where you know that it is above where the range is that you're trading in, and if it breaks out above that, then you know that there's probably going to be a trend reversal. And if you set an alert that whenever that stop loss gets hit and you exit that position, you can flip, which is exactly what I will do. Yeah, I'll lose $400 on it, but my previous trades just made me over 3K, right? Just over this past week. So all in all, if I take 6 profitable trades, I get one that I get stopped out in for a minimal loss, because I think my account's worth like over $14,000 now. We're talking if we lose $400 on a $14,000 account, that is 2.8% that we lost. But we also gained $2,650 on the way there, which if you do $2,650 divided by, say, $11,000, it's a 24% gain on your account in a week. So keeping these risk parameters in mind is something that's absolutely crucial if you actually want to be profitable. Now, if we get stopped out, if I get stopped out on this trade and I lose that $400, exactly what I'm going to do is I'm going to see, okay, where did that candle take us to? When I got stopped out at 43.4, did we go above 43.4? And did we back test the 43.4 to 43.3 range and bounce off of it? Because if we do and we bounce off of it, I'm immediately going to flip into a long position. I'm probably going to take like a 1 Bitcoin long for about $3,000 at 15x leverage. And then I'm going to make that entire $400 back. And I'm probably going to ride it up to the next logical point, which is going to be about the 44 to 44.5 range. If you look at the charts, that's kind of where we're sitting at for the next resistance. Now, I can go a lot more in depth on this with RSI, with stochastics, with MACDs, with Fibonacci's and things like that. I didn't want to complicate it too much. I kind of wanted to let people know what my thought processes were on this. This range trading is exactly how I took $4,000 and turned it into 40K in literally like, it couldn't have been more than 90 days. It could not have been more than 90 days. And in my course that I'm going to be coming out with, that's going to be extremely inexpensive. We're talking $399, and everybody's going to get a 25% discount for like the first maybe 30, 60, 90 days. I don't know. I'm still deciding on that, but everyone's going to get a discount. All my subscribers, all my Wolfpack members, all the pre-senders, everybody that supported me this entire way. Obviously, I'm going to hook you guys up. But the reason why I'm pricing it like that is because, first off, you have to have some skin in the game. Second off, I want it to be affordable enough that people are like, okay, maybe I take this. It's going to be a lifetime membership. So if you think you're ever going to use it, I would suggest just buying it because it'll never go down in price. It'll only go up in price the more that the demand kind of makes that happen. And secondarily, it teaches you, and you teach yourself at your own pace, a skill to where you don't have to be like beholden to all these TA channels to come in and kind of like, or signals groups and things of that sort, where you don't have to be beholden to them, and you can go and learn a skill that no one can take from you. So with that said, we'll see how this next trade goes. Hopefully I don't get stopped out. But if I do, I know what my plan is. And that's the key. Make sure you always have a plan and stick to your plan. There's a reason why I'm not mad that I got out at 42.5 when it hit 42. Because at the end of the day, I still took, $450 profit on that. Could I have taken another, I don't know, $200, $300, $400 profit on that? Yeah, potentially. But overall profitability is what matters. Overall consistency is what matters. Sticking to your plan, having a strategy, having a real plan, and executing on it, that is what legitimately matters. You could take $1,000 and turn it into 4K, 10K over a 30, 60, 90, 120 day period, as long as you stick to your risk parameters and your rules. Okay. And that's exactly how I took four grand. I can show people this, and I'm going to show people this in the course, and took $4 grand and turned it into $40,000 doing literally exactly this. And you don't need a bunch of indicators. You don't need a bunch of all this other stuff that all these other people show you. That's why I give you the high level overview of what's going through my head whenever I'm actually entering these trades, because you can look at the indicators all you want, but if you don't know how to read the charts, you don't know how to read the indicators, you don't know how to kind of spot the trends and the patterns and the channels and stuff like that, a good trader is going to be able to spot those supports and resistances, those channels that we're trading in and ranging in without any indicators. I usually don't even have to put indicators on most of my stuff. I will use them for confluence though. Do we have a bullish or bearish divergence? Do we have a hidden bullish or bearish divergence? What's the stochastic looking like? The RSI? What's the MACD looking like? Are we in the golden pocket? What are the, is this a swing failure pattern? Those types of things, those types of charting indicators and patterns and stuff like that. You can use that to like have more confidence in entering. But to see where the ranges and those kind of like supports and resistances are and those channels that we're trading in, bing, bong, bing, bong, bing, bong, you should be able to pick that out with the naked eye without having somebody or an indicator be able to have to prompt you on that. Now, indicators do help tremendously, and that's something that I will also teach in my training. But other than that, I just kind of wanted to show people that like, this is a thing. This is something that people do. It's not as hard as most people make it out to be, but you have to pay attention. That's why I didn't trade for like 3, 4, 5 months at one point, because I was like, if I don't have the ability to pay attention to it, then I can't be effective and I will lose money. So when you're doing this, you need to make sure that you have the time to allocate to it properly. Otherwise, you should just be investing long-term and not necessarily doing swing or day trades and things of that sort. So with that said, hopefully this kind of, hopefully this delivered some knowledge to you. Hopefully this gives you some win in your sales for 2024. And hopefully people go out and make some profitable trades. And hopefully I can help you in that sense. I will continue to do this on my channel, obviously. And hopefully I can help you kind of get there in your journey if it's at all possible. So I will see you in the next video. Everybody have a wonderful day. Make sure you smash the like button on your way out. Obviously, make sure you hit subscribe. Boom! bang on the notification bell, comment anything that you want in the relevant sections. I appreciate it. Make sure that anything that you're thinking, any trading pairs that you're utilizing, any strategies that you're utilizing, anything you would like me to expound upon anymore, that'll help me actually in building the course. The course should be done probably within, I'd say, the next 30 or 45 days, something like that. So, pay attention for that. Obviously, we'll give you a discount. And, let me know any feedback that you guys have. See you guys in the next video. Peace.